taxation. We'll be spending the next 2 hours to learn about a particular portion of the Nigeria tax law, as well as in preparation for our exams. So, okay, I would like us to all mute ourselves in the while the lecture is going on to avoid any form of distraction. If you have any question, you can already write it down. Please, just give me a second. Okay, sorry about that. So you can already write your question down. So by the end of the class or with interval in the class, I will call you to ask your question. I hope that is fine by everybody. So you can just be reacting with your favorite emoji when I ask. Maybe we are going together, we are on the same page, or you are still hearing me. Just react with your favorite emoji. You don't need to unmute yourself so that the class will not be distracted. Thank you. So let's just go straight to today's business.
Meet yourself now. Meet yourself now.
So today we'll be looking at one of the tax law, like I explained. We'll be looking at the personal income tax, which is a very important, aspect of the tax law that every accountant is expected to know. Please confirm you can see my screen.
Yes, ma'am.
Yes, we can.
Can you see my screen?
Yes.
Okay, thank you. So today we'll be looking at a very important aspect of the Nigeria tax law, which is important to every accountant. It's important to everybody, even be it accountant, be it an individual. It is important to us all, because you as an individual, you are expected to pay tax. As an accountant or a tax practitioner or a tax consultant, you want to advise your client, or you want to even prepare tax for the company that you work for. So personal income tax, which is Paye, is a very important aspect of the Nigerian tax laws. So today we'll be looking at it. We'll be looking at the registration for personal income tax. How do you register for, as an individual, how do you register for personal income tax? We'll be looking at the operations of the regulation. The personal income tax, we want to look at how it operates. Also, we'll be looking at the expenses that are specifically allowed and disallowed by the Act. There are some expenses that you incur as an individual that the law allows you to incur, while there are some that you are not allowed to incur. So today also we'll be looking at these allowed and disallowed expenses. Then also we'll be determining the basis of assessment and the computation of the consolidated relief. How do we assess do we assess someone to pay? Is he right now? Is he after a while? So we'll be looking at that also. We'll also look at the tax exempt deduction and the rate of the tax. The things that you are allowed to deduct from your money before you subject it to tax. Those are the tax allowed deduction. Also, we'll be looking at we'll look at how we can compute this personal income tax. We'll be looking at the format, and if time permits us, we might take a question to practicalize how to compute our personal income tax. But if we don't have time today, that will be what we'll start for in our next class. So we'll also look at how to file your personal income tax, be you an employer or even an employee. How you are expected to file your personal income tax at the end of the month, as well as at the end of the year, depending on what the case is. And also, we identify the offenses and penalties. If you don't pay, if you don't file as when due, if you don't pay it, what are the offenses, what offense have you committed, and what are the penalties for committing this offense. Remember, ignorance is not an excuse. You are expected to read and understand the tax law and act accordingly. So there is nothing like I did not know. So if you refuse to pay when you are supposed to pay, or you did not file when you are supposed to. Sorry. If you did not file it when you're supposed to file it, there are penalties for it, and you are expected to pay for the penalties. So without wasting much of our time, let's just go straight. Registration for payee. As we all know, payee is the type of tax that is deducted from individual. It's a type of tax that is paid by individuals. As an employee, the tax that you pay at the end of the month, it is just simple as you see it, the pay as you earn. You are paying it based on what you are earning. So pay is paid by individual that are in employment, and those that are doing their maybe self-employed, they pay too. Those people that are self-employed, they pay too. So how do we register for pay? If you want to say you want to start paying, you want to start remitting, as a good citizen of Nigeria, you want to start remitting, what should you do? So you have to register for pay. An employer shall register with the tax authority for the purpose of deducting income tax from his employees, with or without formal notification or direction by the relevant tax authority. So you that is an employer of labor, the government has said that you collect the money from the salaries that you are paying to your employee, and you remit it accordingly to the government. Whether the government is being the one telling you to do it or directing you that you must do it or not. Remember, like I said earlier, ignorance is not an excuse. So as an employer, you should understand, or you should know that there is a law that is guiding you, that says that remove the tax from the salary. Before you pay tax, remove it and remit it to the government. So how does pay regulation operate? It operates in several ways. It operates in the deduction of tax, in a way of deduction of tax. That's like the first and foremost thing. So after an employer had registered, the employer will have his or her registration number or registration code, as the case may be. So the employer is now expected to deduct the tax from the government, from the employee. The employer shall, within 6 months of the commencement of this regulation, or 6 months of commencing a business, deduct tax from emolument of his employee and remit to the relevant tax authority. Payee are paid to their individual tax, and they are paid to State Internal Revenue Service, like LIRS, using Lagos State for example. So payee are remitted to state government. Payee are remitted to state government. So, and it is where your payee will be paid is determined by where you reside. We did a place of residence in our last class. So where you reside will determine where your payee will be remitted to. If you are working in Lagos State and you reside in Lagos State, your payee will be remitted to Lagos State Internal Revenue, whether you are from Lagos State or not. When I say from Lagos State, maybe you are from Delta and you are living in Lagos. It is the place you live. That's where your pay will be remitted to. That's why they use the word relevant tax authority. Without prejudice to the provision of Regulation 21 of this regulation, an employee who fails the regulation commits an offense and is liable on conviction to pay 25,000 naira in addition to the payment of arrears of the tax due. So if an employee refused or did not remit that tax, collect and remit that tax accordingly to the government, the employee is expected to, the employee has committed an offense, and the employer is going to pay a fine of 25,000, and after paying that 25,000, you will still pay that payee that you have refused to remit. So as an employer, you are expected to deduct payee and remit it to the government accordingly. Where the employee works under the supervision or management of a person who is not his employer, the person hereinafter in this regulation referred to as the manager shall furnish the particulars of the employee's emolument as may be necessary to comply with the provision of this regulation, and the manager shall deduct the tax from the employee in the employee's emolument and remit same to the relevant authority. So for example, I will just use the case of contract staff to explain. So maybe you have somebody that is working with you, and the employer has somebody that is working with him or her, and the person is not directly employed by that person. So when you pay to let's for example, most securities in organizations, they are not direct employees of the security of the company they are working with. They are probably outsourced. So the company, for example, will not deduct tax from their salary. They will not deduct pay rather from their salary, though they will deduct withholding tax from the service charge, but they will not deduct pay from what their salary is. They'll pay their salary to their company or their manager. It is that manager that will in turn deduct the pay and remit to the government. So that's what the number 3 point is trying to explain. So another operational aspect of pay that we need to consider is the records of deduction. What and what do you deduct, or what and what are you expected to deduct? An employer shall record either on the tax deduction card or in such other form as may be authorized by the relevant tax authority the following particulars regarding emolument of his employee. So an employer is expected to record the following information. 1, the month of payment. Now, a lot of things had been modernized. We are now in a technological world. We don't really use paper and book and biro to do all of this again. Today I logged in. I remitted the payee of the company I work with today, and it was very simple and straight. I just logged into the LIRS portal and did the necessary things. So all of these things that they've counted here are already in the portal. They're already there. So you just have to just click and you are good. But for the purpose of exam and for the purpose of this class, let's just look at them one after the other. What we are expected to record: 1, the month of the payment. 2, the amount of emolument. 3, the contribution by the employee to an approved pension fund. So in your payroll, or in your payroll, there is a place provided for pension. You see there that this is the amount the person is paying to pension. The cumulative free emolument in relation to date. The cumulative free emolument in relation to date. The cumulative taxable emolument. Tax-free emolument are those expenses that are not subject to tax. Those expenses that are not subject to tax, they are the free emolument. Then the taxable ones, you also put it there in relation to date. Then the corresponding cumulative tax. So at the end of the day, after deducting your non-taxable income from your taxable income, as well as your tax, your pension, what is remaining is what is called taxable income. That is what will not be subject to tax. Then lastly, the tax, if any, deducted or repaid on making the payment. So all of this will be in your particulars. These days, what we call it is schedule. So there is a schedule that you will upload for LRX, for example. There is a schedule that you will upload to the portal that will contain all of this information. So you put the employer's name. The employer will have their ID, their designation and everything, and the amount you are paying them, the pension and everything is there, and you upload it to the portal, and the portal will generate your receipt for you, your bill for you, how much you are expected to pay, and you go and you make payments. So that's the information that is necessary to deduct payee. Please, I would like to confirm if we are still together in this class, or I've been talking to myself. Let me see your emoji in reaction to that. All right, thank you. Thank you very much. So let's just continue. So another operational aspect of payee that I want us to look at, that we'll be looking at is the cumulative net emolument. The cumulative net emolument. Before payment of emolument to any employee, the employer shall ascertain the cumulative net emolument after due deduction of an approved pension, cumulative free emolument, the cumulative taxable emolument, and the corresponding cumulative tax. So at the end of the day, if you are negotiating salary, for example, you are going to go into an interview and you are given a job. Sometimes some of us don't negotiate we don't negotiate salary in it. By the time they tell us your salary is so amount, you just jump home and you go home happily. You resume the work. And when it is at the end of the first month, when they are paying you salary, they will not pay you something that is different, that is lesser than what you were told. It is that time you will not be asking questions. No, this is not what we negotiated. We negotiated the HR will not tell you, no, what you negotiated is this, but there are deductions. So it is actually advisable that whenever you are going for an interview and you are negotiating your salary, you should negotiate it based on gross and based on net. When they say gross, you should be able to ask them, if this is my gross, what will be my net? So you will know the necessary deductions that will be made. Ideally, you're supposed to be able to do your deductions yourself and arrive at your net. But companies varies, and each of these companies, they have different policy for their deduction, for what they deduct. So that will make you with that you are expected to negotiate your salary on gross and on net before accepting any offer. Anyway, this class is not for that, but let's just continue. Where the cumulative tax is less than the previous cumulative tax, the employer shall refund the difference to the employee. So where an employee in respect of whom the tax deduction card has been issued ceases to be in employment, the employer shall send to the relevant tax authority a certificate on the prescribed form containing the following documents or particular. So when somebody resigns from your company, you are supposed to you are expected to write to the relevant tax authority, or to submit to the relevant tax authority, that this person is no longer Please give me a second. Sorry, I have not shared the YouTube link before in the group, so I just shared it now. Okay, so where an employee is in respect of whom a tax deduction card has been issued ceases to be in employment, the employer shall send to the relevant tax authority a certificate on the prescribed form containing the following particulars. So what is saying is that where your employee, maybe the person resigns or the person is no longer there working with you, they are expected to write to the tax authority the name of the employee, any number used to identify the employer, the employee, that's supposed to be employee, the address of the employee, the date on which the employment commenced, the date on which the employment ceased, the relief from income tax, if any, appropriate to the employee's case, the cumulative emolument at the date of leaving, and the corresponding cumulative tax. Please give me a second. I need to take a call. All right. Sorry, guys. I just had to take that call. Okay, so I was explaining what an employer is expected to do when an employment ceases, when the employee resigns, and please, please mute yourself, please. Everybody should mute themselves, please. So this is just to help the employer to tell the tax authority that this person is no longer working with me. This person is no longer under my employment. The person had resigned, and so tax authority will not be expecting you to remit tax for that person that had resigned or that had left your employment. Somebody is disturbing us. So, certificate of deduction of tax. The employer shall make on the prescribed form 2 copies of the said certificate and deliver them to the employee on the date on which the employment ceases. So all the taxes that you have been collecting or you have been remitting on behalf of the employee, you're expected to give an account to the employee that this is what I have remitted, this is what I have collected from your salary, and this is what I have remitted, just like an evidence to properly say this is what it is. On the commencement of another employment, the employee shall deliver 2 copies of the certificate to the new employer, who shall, 1, insert one of the copy of the certificate, the address of the employee, if different from the existing entry made by the former employer.
Please, can you mute everybody? Mute everybody.
Or rather, let us remove that person.
Okay. I think the person has corrected is herself. So let's just continue. So let me take it back from the commencement of a new employment. On the commencement of another employment, so when the employee had resigned and gone to another employment, the employee shall deliver 2 copies of the certificate to the new employer. So it's a case of your former employer gave you the certificate that this is where I have remitted your tax to, this is where we stopped remitting your tax. Now, when you are now going to the new employer, you present that to the new employer to say, okay, this is where my tax was. This is my tax certificate to show that you are paying tax. Your information also will be there, and it will even be easy for the new employer to just get your details. All of this is for him or her to continue with your tax remittance process. I'm sorry, the call is coming again. I'm so sorry. Let me take. I'm sorry, guys. So let's continue from. Let me go back again. This call is really, really distracting me. It's a call from my office. I just have to attend to it.
Please, are you still hearing her?
Can you still hear me, please? Can you still hear me?
Yes, we can.
Yes,
Okay. Thank you very much. Thank you very much. I'm really, really sorry about this distraction. It's above me. I just have to pick. So let's continue again. Let's continue from the commencement of another employment. I will just have to be fast. So we are looking at it from the perspective of an employee dropping one employment and picking up another. So when you drop one employment, your employer is expected to give you a certificate to show that, okay, this is what your tax payment looks like. Then that certificate is what you give to the new employee. That's just what the whole commencement and season of employment is talking about. So let's quickly continue to the death of an employee. On the death of an employee in respect of whom tax deduction card has been issued, the employer shall send to the tax collector or the collector of taxes the certificate and shall insert thereon the name and address of the personal representative of the deceased employee. If any emoluments are paid by the employer to the deceased person next of kin, the employer shall, in making such payment, deduct tax. So if the employee died and if an employee died and the employer is still expected to make payments to that, maybe the next of kin, the tax that are expected from that payment will still be deducted accordingly. The tax will still be deducted accordingly. Oh God. Please, 1 second. Okay, I'm back. So I will want to quickly apologize for all of this distraction, and also let you guys know that the class will be ending in the next 15 minutes. I just got a call from the office that I needed to go back to the office this night, and I just have to do that. Please, I'm sorry. That's how we see it. So let's continue. So I will be rounding up by 8. On the death of an employee, when an employee dies and the employer is expected to make payment to the employee, any tax deduction that is attached to that payment is expected to be deducted and remitted to the relevant tax authority. For the fact that the person had died does not mean the tax will not be remitted. Remittance of tax deduction. How do we remit personal income tax, or what are we expected to do in respect to remittance of personal income tax? Paye are expected to be remitted 10 days of the end of the month. 10 days at the end of the month, an employer shall pay to the nearest tax station or any bank as may be prescribed or designated by the relevant tax authority. All taxes deducted under this regulation, the tax officer shall give the employer a receipt on the prescribed form for the total amount paid. So, like I said, the whole system has been automated and we now make payments online. I mentioned earlier that I remitted Paye today. Today is 8th, and the deadline for Paye for July Paye is Sunday, which is 10th. Because I will not be in the office tomorrow and next, I had to quickly do it today and make sure that I close it. You can do it first, you can do it second, you can do it third, but it's not expected to be more than 10th, on the 10th day of the following month. Don't ask me people that pay salary on the 15th. The law say on the 10th day. If you want to pay Paye before you pay salary, it's up to the company. But following the law, you are expected to remit your Paye on the 10th day of the following month, or not before the 10th day. Within it, it should not exceed the 10th day. So when you are paying, with all the documents, the particulars you have, the information of the employee that you already have, you are expected to submit it to the tax authority and you make the payment accordingly. Like I said, all of these are now automated. You don't need any paper to do it. You just go to the portal, log in, and you do it, and it's easy. You even print your receipt from the portal. Demand for remittance of taxes. If after the 10 days of the end of any month, an employer fails to remit tax to the tax authority or any bank designated for such payment, the collector of taxes shall demand for immediate remittance of the tax due. So if at the end of the 10th month, within the 1st and 10th month, they will not call you. But if at the end of the 10th month, you have still not remitted what you are expected to remit, then they will not call you for tax remittance. They'll call you to come and remit your taxes. Application of the Tax Act. If the relevant tax authority discover or is of the opinion at any time that an employer has not been remitting taxes, the tax authority may, within the year of assessment or within 6 years after the expiration thereof, assess the employer and the provision of the Act as a notice of assessment. Appeal and other proceedings shall apply to the assessment or additional assessment and to the tax thereunder. So the tax authority has the right to come and meet you anytime to say what you have remitted is not correct, or you have not remitted your tax. So the law permits them to come and meet you. So when they come, you are expected to defend yourself. If they come and meet you and say you have not remitted and you have remitted, you have your receipts and you have your document to show that you have remitted. But if you have not remitted, then penalty and fine will come in. So that is why it is expected, if you are working as an accountant or you are the person in charge of tax in your organization, or even as an individual that is running a personal business, remit your tax as and when due. Inspection of record. Every employer shall produce for inspection at the employee's premises, at the employer's premises, all wages record, tax deduction card, vouchers and other documents and record relating to the payment of emolument of his employees and deduction of tax thereof. So this is where tax audit comes in. I think tax audit is a topic on its own. You will do it also. So this is where tax audit comes in. So when the tax authority, maybe they notice that you are not remitting, or what you are remitting is not up to what you are expected to remit, they may write to you that they want to come for tax audit. They want to come and audit your book. So when they come, they'll come to your office premises. They'll come to they have the right to come to your office premises and request for relevant documents, such as your wages book, maybe your salary schedule. They want to see if what you have declared as tax is actually what it is, or what it is supposed to be. Then if you are the one that is paying tax, maybe when they come and they tell you did not pay tax and you have paid, they will want to request for your receipt. There was a company I worked with sometime last year, and when in the office one day, our receptionist just came to the finance department and said, some people are here, they want to see a representative. So I was the one that came out, and they were from FIRS. So their intent was that what they claimed was that we are not paying tax. So I just had to bring out the receipt of all the taxes, the monthly taxes, the monthly remittance that we have been doing. Immediately I showed them all of this. They just kept quiet, and that was it. So if you are paying, you will be proud to bring out your receipt and your invoice. But if you are not paying, that's when the tax authority, the tax people will be coming after you. After that day, they didn't even come again. So that's it. Duty of successor in title. If any employer is unable to perform the duty under this regulation by reason of death, incapacitation, liquidation, or any other reason, his personal representative or successor shall perform such duty. So when the employer, maybe the employer is not physically okay to do this, is the employer, good and fine, but he's not in the position to do this tax remittance, a representative, or in the case of death, the successor will continue to carry out such duty. Notice to render return. The tax authority may give a notice to an employer requiring him to render return of any emolument paid to the employee before the end of that year, and any such return shall be rendered to the relevant tax authority within the time specified in the return. The relevant tax authority may give a notice to an employee requiring him to render returns of any emolument paid to an employee before the end of that year. Any such return shall be rendered to the relevant tax authority within the time specified in the notice. So if the tax authority can pick maybe a particular person, and they tell you that this person is working with you, we want to see the person's tax details. Yes, there are some individuals like that. There are some people like that. They just want to see their record. So as an employee, you are expected to present the record of that tax, of the person's tax payment to the relevant tax authority. Notice of assessment. The relevant tax authority shall serve a notice of assessment on every employee assessed to tax. Though we have what is called a self-assessment, but then the tax authority can still serve their notice of assessment to the taxpayers, especially in cases where a taxpayer is not doing the needful. So let's quickly look at the allowable and non-allowable deductions in personal income tax. If you want to pay your tax, your personal and your payee, what can you deduct from it and what can you not deduct from it? Those are what is referred to allowable and disallowable expense deductions. So before we continue, let me confirm again if we are still together.
We are together.
We are together. We are together.
Okay.
We are
Please
together.
try and help the
Okay,
note
thank
for
you,
us,
thank you,
please.
thank you. Let's continue. Let's
Not to
continue.
drop the note for us. Please,
Yeah, I'll
thank
drop
you.
the notes in the class. I'll drop the notes in the class. Let's continue. Let's quickly continue. So what can we deduct and what can we not deduct? So let's first of all look at the things that we can deduct. A sum payable by way of interest on money borrowed. And employed as capital in acquiring the income. So the interest, or if you borrow money to start a business or to run a business, and you pay an interest, that interest is an expense, is an allowable expenses. Because if you had not borrowed that money in the first place, you will not even make the profit that you want to pay tax on. But the money you borrow must be for the purpose of the business. So remember, it is traceable. If they want to trace it, they will trace it. Don't borrow money to buy a house or buy land or do something outside the business and don't come and see the interest. You want to deduct it from your profit because you want to reduce your tax. No. So the money that is borrowed and it is employed, you see, it's employed as capital in acquiring the income. Then the interest is an allowable expense. Interest on loan for developing an owner-occupied residential house. Interest or loan for developing an owner-occupied residential house is also an allowable expenses. Rent for that period and premium, the liability for which was incurred during the period, payable in respect of land or building occupied for the purpose of acquiring
So
the
please
income.
mute yourself. I don't understand this day class.
I don't
Please,
understand why
help us to mute
mute
yourself.
yourself.
I'm not an admin in this call. I would have muted everybody. Please help us to mute yourself, please. Or
Remove the person now. You can remove the person.
Is this gift? Is
The
this
gift
gift
should
that
be removed. The gift should be
I
removed.
don't know.
She's making
Gift has been
noise.
something.
Ah,
Yeah, moderator, please continue.
please, let's continue. I'm sorry about that. Okay, let's continue. I was explaining that the rent that you paid in the place or the building that you are using to get this income. Remember, if you we are looking at personal income tax from the perspective of you being an employer and an employee rather, and we're also looking at it from the perspective of you owning your own business, not company. Business name, sole proprietor. If you are a sole proprietor, you're having a business name, you are expected to pay payee, personal income tax on the profits that you are making. So if you rent an apartment or you rent a building that you are using for this business, and it is the building that is helping you, or it's part of the things you need to do for you to make this profit that you want to pay tax on, the rent on that building is an allowable expenses. Because if you look at it very well, without the building, to a large extent, you will not be able to get the income. Any expense incurred for repair of premises, plant, machinery, or fixture employed in acquiring the income, or for the renewal, repair of or alteration of any implements, utensils, or articles so employed. So anything that maybe you are, for those people that maybe let's use printing, for example, a printing press, for example. You have a photocopy machine, you have a generator, you use it to do your business. So the generator got spoiled and you want to, you fix it, you repair it. It's an allowable expense, because if the generator is not working, you cannot work. You cannot make the profit that the tax people want to come and collect tax on in the first place. So any expense that you incur in those kind of repairs, you are expected to deduct it from your profit before getting to the profit that is chargeable to tax. But there is a clause, provided that the premises, plants, machinery, features, implements, utensils, or article are not used in part for domestic or private purpose, or much of expenses as related to such used to be deducted. So you are provided you are not using it for your personal, for something that is not of the business. Just the same way we talked about interest or capital employed. If the money is entirely invested into the business, then you can use the interest. The interest is an allowable expense. Same way, do not go and repair something that you are not using for the business and you say, it is repair now. Repair is repair. No, repair is not repair in that case. So it will be something that has to be done for you to get that. It has a connection to that income. That's when it will be an allowable deduction. Remember, these people too, they know what they are doing. They want to probe to get to the root of whatever they are looking for. Any provision for bad and doubtful debt. Any provision for bad and doubtful debt of specific nature. Specific nature, emphasis on specific nature. It is not specified. Maybe you have done your analysis and you are very, very sure that this one no, it don't go. So there must be backings to it. Don't just come and say, out of my receivable for this year, half of it will not come. Oh yeah, this allowable expense, let me remove it from profits. When you know fully well that the money you still go and recover it from the whoever that is owing you. Any bad debt written off. The first one is provision for bad and doubtful debts that are specific in nature. Let's note this point. So these are points that they can just be asking in your part B, part C question. They are very simple for you to just outline and use them to get your mark and move on. So any bad debt written off is also an allowable expense. So a debt that has been completely written off, maybe the person that is owing you is dead, or you have carried out your analysis on that, you've used court to drag. You have carried debt collectors, debt collection agency. You've asked them to come and help you collect the money. The money still did not come. You have done all the necessary things that you need to do. You now write it off and say this money is not coming again. It's an allowable expenses. Contribution to pension, to a pension, provident, or any other retirement benefit fund, society, or scheme recognized under the Pension Reform Act. Peter 2004 as amended. So the money that you are contributing to pension, that's why pension is an allowable deduction. Any other retirement benefit fund that is recognized by Peter, the Personal Income Tax Act, not just anything, any kind of deduction. It should be a deduction that is recognized and allowed by the Personal Income Tax Act. So then you can remove it from your income. You see, when we will do this calculation, you see that you deduct all of these things all of these allowable deduction before we now arrive at the chargeable or chargeable profit. Legal expense that are limited to general legal advisory service, retainership fees, renewal of a short lease, tenure of less than 50 years, and any cost of protecting or defending the properties of the business. You know, legal expense can be in different forms. So they put the type of legal expense that. So you do not just say legal expense. No. in some practical question, they will give you legal expense and they will give you a clause. They'll tell you that maybe a driver committed an offense. Maybe you beat traffic rule and you paid for this. Or let me just use a driver. You beat traffic rule and you made payment for this. That's not an allowable expense. So you now carry a legal practitioner to go and defend yourself. It's not an allowable expense because you are not expected to to go against traffic in the first place. So that is why they put it there. They put the specific legal fees or legal expenses that are allowed. So not just anything, any kind of legal fee. And they must be exclusively related to the business. Then lastly, any other expense proved to the revenue to have been incurred wholly, reasonably, exclusively, and necessarily incurred for the purpose of the business. So businesses, we have different types of business and different nature of business. What is an expense to company A might not be an expense to company B. So the tax authority cannot really state everything that will be allowable expenses to a particular company. For example, let's take donation, for example. Donation is a disallowable expense, but there are some business that you have to donate. For the business to go, you have to donate. So that is why they put it here that it is an expenses that has been seen as wholly, reasonably, exclusively, and necessarily incurred for the purpose of the business. So this is the WREN principle, WREN. In tax, you must hold on to these 4 things: wholly, reasonably, exclusively, and necessarily, before you can start claiming things that you want to deduct from your profit. So let's quickly go over the disallowable ones, and I will stop there because I have a call that I need to go and answer. So what can we say should not be allowed? What the law says are not allowed? 1, domestic or private expense. That's why there is an entity concept in financial accounting, that the business is separate from the owner. Don't bring your domestic thing inside and say they are all expenses. At the end of the day, profits will not be nothing. So your domestic and personal private expenses are disallowable. Capital withdrawn from trade, business, profession, or vocation, and any other expenditure of a capital in nature. Anything that is capital in nature, they are not expenses. They are disallowable expenses. Any loss or expense recovered under an insurance or contract of indemnity is also a disallowable expenses. Rent of or cost of repair of any premises or premise not incurred for the purpose of producing income. Remember, we mentioned rent. You see, rent is now appearing twice now. We mentioned rent, that rent is an allowable expenses only when it is used for the purpose of producing income. Now we are mentioning rent again, so it's even a win-win for you if in exam. If they ask you now to list 5 allowable and 5 disallowable, and you remember rent, you should be able to develop rent into both allowable and not allowable or non-allowable. Taxes or income or profit levied in Nigeria or elsewhere, except as provided in section 13 of the personal income tax. The income from a dividend paid by a company other than a Nigeria company, this also is a disallowable expense. Any payment to a pension, provident, savings, or widow or an orphan society fund scheme, except as recognized under the Pension Reform Act. So if it is you are paying a pension that is outside the Pension Reform Act, it is also disallowed. Any donation that is outside that, any provident or savings you are paying that is outside the Pension Reform Act is also disallowed. Another disallowable expense is depreciation. Even if you forget anyway, you can never forget depreciation. Depreciation is on fixed asset is a disallowable expense. When I was writing economics, I think this is the number one I will always write first. Even in company income tax. Yes, it's also there in company income tax as a disallowable expense. Depreciation is disallowed because it has multiple ways. We have different ways of calculating it. So it's difficult for the tax authority to determine which is correct. We have different methods of calculating depreciation. So instead of depreciation, the tax authority has given taxpayers capital allowance. So they give them capital allowance in place of depreciation. So when the financial accountant prepares the account and when the financial accountant prepare the account and deduct depreciation as an expenses, when the tax accountant will come, the tax accountant will add back depreciation. The tax accountant will now do what is called capital allowance relief when computing the taxable or adjusted profit. You see that very well in company income tax. Any sum reserved out of profit except as permitted by the Revenue Act based on section 16. So if you now decide to portion after calculating and you see that you made a lot of profit, you now decide to pull it out and say, this one is reserved to reduce the profit, it is disallowed. It is not allowed for you to do that. Any expense of any description incurred within or outside Nigeria for the purpose of earning management fee, unless prior approval of an agreement giving rights to such management fee has been obtained from the minister. So before you can say, oh, this is a management fee for an expense that you are incurring, there must be an approval, there must be a law backing it that, okay, this is actually a management fee. If there is no law, you are adding it back. Is a disallowable expenses. Any expense whatsoever incurred within or outside Nigeria as management fee under any agreement entered, except to the extent as the minister may allow. So that is the one that, except the one that the minister has allowed, that's the one that will be allowed. If the minister does not allow it, then it is a disallowable expenses. So this is where we'll stop. This is already past 8. I still need to go out and come back. Guys, I'm so sorry. This class is supposed to end by 9 p.m. but I have a duty call now. I have to rush out. I am so sorry. I didn't plan for this, but this is it. Our next class will be next week, Friday. Like my class. Tomorrow is another day for tax, but for my class, it will be next week. Please, if you have any question, please drop your question on the group, the task group. I may not be able to take question now. Just drop your question on the group. I will answer them all accordingly. Thank you once more for your time and have a good day. A good night rest, sorry.
Thank you very much, Papa. Please drop the notes for us. Thank you.
Yes, ma'am. Do that. Thank you.
Thank you.
Yeah.
Thank you.
Thank you.
Thank you.
Please, is there where we can get the record?
Yes,
you very
recording
much
will
for
be shared on the group.
help us to
It will be
drop it. We can
It will be
do
shared
so.
on the group, yeah.
Okay, thank you.
Thank you much.
All right, thank you. You can leave the call now.